Good afternoon. This is Hap May with the Legal Play.
And I'm Chelsea El-Azzi, Hap's associate. All right, Hap, it's been a few weeks since we did one of these.
Right? I think last one we did talked about, was a tax thing that said, what if Kamala Harris won? I think that was her name.
Yeah.
And what if Donald Trump won? Kind of what we're looking for in terms of things to happen in 2025. Well, I think we can eliminate half of that discussion
Yes.
and focus a little bit more on what is now expected, knowing that Trump got elected president and that the Republicans control the Senate and still hold the House, although the House is still a skinny majority that the Republicans have, which may give us some thoughts as just how easy or difficult it might be to craft a new tax bill next year.
Right. And this particular podcast is not, necessarily what can we expect generally, because there's a lot of things I think that will be happening with Trump as our next president. But this is going to, yeah.
There will be, there is a change, with elections come consequences.
Yeah.
And so we will see some different approach to governance.
But this is specifically part two of what can we expect as far as tax legislation and tax planning
in 2025 and for 2026. And just to lay the backdrop again, in 2017, an act called the Tax Cuts and Jobs Act was passed. It's basically the Trump tax bill that was passed while Trump was president and the Republicans controlled the House and the Senate. And if I remember correctly, everything was straight line vote, straight party vote with regard to that. Not a single Democrat voted for the bill. Not a single Republican voted against it. So that's
kind of shows you where
that shows where things were, and that had many provisions. It was an overhaul of the whole entire tax code. Many of those provisions were temporary, and they will sunset. The proper term used by the legislature is a sunset, and basically go back to pre 2017 or pre 2018 tax law if Congress doesn't do anything between now and December 31st of 2025. So both parties probably have reasons they don't want that to happen. And so there probably is going to be a tax bill passed. I would, as I said before, under the assumptions that Trump won, that I would expect that largely the legislation that will come out will extend what is going to sunset, what is otherwise scheduled to sunset in 2025. The probably most significant example of that is the estate tax exemption, which prior to the 2017 Act was roughly $6 million. And it had cost of living inflation factors in it. So it would probably be about seven, or sometime between $7 and $7.5 million, meaning that somebody could die and leave $7.5 million to their heirs without paying any estate tax on it.
Okay.
That number is bumped up under the Tax Cut and Jobs Act to what's now roughly $13 million. That was that, and that's so if somebody dies between now and December 31st, they will have $13 million they can give to their heirs without estate tax. After 2025, given or in 2026 or years after, unless Congress does something, that number will drop down to about 7 or 7.5. So there are a lot of people interested in that. And there are a number of other provisions that sunset. One of them that doesn't sunset is the 21% corporate tax rate that was made permanent in 2017. So there are a number of issues that Congress will be addressing in the next tax act. One of which is the what they call SALT taxes, state and local taxes, or the ability to deduct state taxes on a federal income tax return, which is now limited to like $10,000. There are blue state Republicans in the House that will be in favor of, you know, either eliminating that cap or expanding that cap so it's a large number. And they are probably those blue state Republicans in the House. There are a few in the Senate. And basically, those states that have state income taxes. Texas doesn't have one.
Nope.
Uh,
I know Colorado does.
yeah, and most states, there are probably half a dozen states that don't.
Okay.
I know Washington doesn't, Florida doesn't, Texas doesn't. I think Tennessee has one that that may not apply. There's one state that has it that doesn't apply to wages, like dividends and interest. You got to pay that, but wages, you don't.
Oh,
And I think
interesting.
New Hampshire doesn't have a state income tax, I think. And so there are a handful that don't. And those are really advantaged under the current system because they don't have to pay state taxes, and people in New York, California, most other states, Ohio and Pennsylvania, both of which I now have some Republican senators, uh, they have to pay state taxes, and they don't get a deduction, or they're limited to $10,000 deduction for their state taxes. And that includes state sales tax, state income tax, state property taxes. So even in Texas, I mean, we have some property taxes that would be deductible. I know that my taxes is more than $10,000, so I can I'm limited to $10,000 on my house in the process. And so that is one of the issues that I expect to be some taxpayer relief with regard to that. Now, when they start giving taxpayers relief, that reduces the revenue that the federal government gets, meaning it doesn't have as much to spend. It has to borrow more or spend less. So I think there'll be some effort to figure out how to, pay for that, those provisions that expand tax deductions and restrict the amount of money that the IRS can. I think there will be attempt to reduce federal spending. We'll see how aggressive the Republicans get with that and how successful they are in getting that. We'll see what cuts there. There may also have to be some additional revenue. The talk is, are we going to have more tariffs? And are we going to have tariffs just for more than just to sort of punish our trading partners that are doing things to harm the American economy, or doing something that requires sanctions? Are we actually going to have tariffs that are going to be a constant revenue source?
Okay,
to
tariffs
the federal
specifically for funding purposes to increase revenue.
Right, and I'm there are a lot of economists that will tell you the problems that will cause. There is a risk of inflation if that occurs. So I'm not sure whether that actually is something that comes about, or it's just merely a negotiating tool to try to come to other agreements with Mexico, Canada, Europe, maybe China, and other potential trading partners. I'm not sure that winds up being a long-term steady source of revenue for the federal government. So there may be other areas where tax rates are increased, or deductions that were allowed in the past are now restricted in order to make room for SALT taxes and other things. So it's going to be an interesting year. And had the Republicans having taken the White House, taken the Senate, if they had a larger majority in the House, I would think you'd give something looks very much like the 2017 attack. But given the narrow majority in the House and the fact that there are Republicans from New York and California and Pennsylvania and other states that are anxiously looking for relief at least on the SALT taxes, the state and local taxes deduction issue, that they would be hard pressed to just simply renew the 2017 Act.
Okay. So probably some changes, but
I would think,
not as drastic as we might have expected
I,
with a Democratic president.
I would think so. Yeah, I think had we had again, I mean, this kind of moved at this point. Had we had a Democratic president, and they flipped the House and hung on to the Senate. By they, I mean the Democrats. We probably would have seen uh, less fear about going back to 2017. They probably would have had some reasons to try not to do that, but I think they would have been more willing to do that. I think generally speaking, Democrats would be less concerned about uh, lowering the federal state tax exemption. I think Democrats would be perhaps more concerned because they have larger constituencies in what I call income tax states. They would be more concerned about the ability to deduct uh, state income taxes. They also would be less uh, concerned, or the Democrats would be more likely to say, let's take another look at the 21% corporate tax rate. It's not going to expire, but there's nothing keeping Congress from passing a law that increases that to 25 or 35 in the process. So, that's kind of where we are. I mean, look for some changes, but I don't think they'll be that radical.
Okay.
All right.
All right. Well, thanks, Hap.
All right. And this is Hap May with a legal play.